Good evening. Welcome to another episode of the News Network. I'm Brian, alongside with host Jake and technical producer Zach. We are going to be talking about the economy, not only in the ground news section, but also what's going on with the stock market, what's going on with tariffs, what's going on with everything. I mean, the stock market was up by, I think there was one index that was up by like 3,000 points, the other one was up by 2,000. Definitely the largest point gains in stock market history. Not the largest percent gains, but definitely the largest point gains in history. And we're going to go over what caused it, kind of what's going on in the background, and we're going to try and give you guys some context as to what you can maybe expect to see in the future. Now, I want to make this very clear. This goes for myself, Jake, and Zach. We are not financial advisors. Nothing that we say should be construed as financial advice during out this episode, but we are just going to be giving you context as to what could have caused the stock market to do X, Y, Z, but not what is going to happen in the future. Past results do not guarantee future performance. So, um, just wanted to throw that out there as a caveat. But outside of that, Jake, anything you want to say before we get kicked off here?
Yeah, just hopefully future performance is good, but
Yeah,
I don't
fingers
know.
crossed. You don't have the crystal ball.
Yep, with a magic 8 ball.
The Magic 8. Will the market go up? Ask later. Dang it. Okay.
Yeah, ask again later.
Yeah, ask again later. Alrighty. So go ahead and throw up that ground news page for us, Zachary. All right. Perfect. So yeah, we're just going to run through these quick three stories here at the top here, and we're going to kind of give a little bit of a tidbit on each one. Trump pauses 90-day tariff, or Trump pauses tariffs for 90 days. However, he did raise the China tariff. And if I read correctly, some of the tariffs on Mexico and Canada are going to remain in place. However, the tariffs that he did end up pausing were the ones that he had on that board that you can see in that photograph. So those are the ones that are like, let's say the EU had like a 20% tariff, Vietnam had like a 40%, like a 46% tariff, things of that nature. He has paused those for 90 days, and those will be reevaluated in due time. Additionally, I believe read that there are tariffs that are going to be coming into place on pharmaceuticals and pharmaceutical industries for countries that ship us drugs. I believe that one of the largest producers of pharmaceutical drugs that ship to the United States is China. Again, we've also ratcheted up the tariffs on China, which kind of is a segue into the second article that you see down here. Um,
And I
and I
wanna
will,
I wanna I wanna
yeah,
make note on that. I guess the narrative that the president is spinning with like the fentanyl coming in, that makes a lot of sense why he would be doing this
yes, and that
in his
there
in his eyes.
and there was a Senate hearing that occurred on this the other day, featuring the trade representative who was talking to the House today. But during his live stream or during his conference with the Senate committee, I did get to listen to him, and he said that that was one of the reasons for the tariffs being so high on China was for them to
Yeah,
make
yeah.
precursors for fentanyl and things of that nature. And he also additionally brought it up and got into a verbal spar with Bernie Sanders, stating kind of what we've talked about on our episodes about how the the precursors and some fentanyl is coming through the Canadian and Mexican border, which is why there are tariffs on those countries as well. So,
It makes a lot of
um,
sense why we're seeing that.
yep. Now, it's kind of hard to see, but I can read it on this first page here on the left side article. You can see there's China right there with 34% tariffs in the upper right hand corner. Um, So those, or sorry, 34% is what they had enacted on us. We enacted a 67% tariff on them. So that tariff jumped up to, I believe it was at 104%. Um, and then when Trump announced the pause, we raised the tariffs to 125% on China. And I cannot confirm this, but I believe I have seen another report as to where they have been raised again. I mean, this is something that's rapidly ongoing. I mean, this is changing by the hour, it seems. So I don't think we're going to have to wait another 90 days to get more news in regards to tariffs in the United States.
No,
But
probably not. It's probably going to be a thing that happens daily.
yeah, it's going to be in the news cycle for a while.
Yeah, for a
Um,
while. Yeah.
but now these next two articles, you can see this is the countries trying to fight back. So you can see China raises tariffs on United States goods from 34% to 84% in response to Trump tariffs. So these countries obviously aren't going to go down without a fight in regards to this, especially the ones with more powerful economies. I believe I've also seen reported that there's been approximately 75%, or sorry, 75%, 75 countries that have reached out to the Trump administration in order to try and facilitate trade deals. However, I believe CNBC asked the admin for a list of those countries, and they refused to provide them. Which I can see why that's frustrating, but I can also kind of get it. Maybe they don't want the countries to be out in the public light. I'm not saying that there haven't been 75 countries that have reached out, but I could see that if you've got ongoing negations, you maybe don't want to tell the world who you're talking to, and then have the people you're negotiating with, you know, feel betrayed or feel slighted or something like that, something of that nature. Um, but the last one here, yeah, European Union approves first set of retaliatory tariffs on the United States. So one of the things that they did with this 90-day pause is they kind of made a point to say like, hey, we're suspending that 10% across the board tariff that we were going to put on everyone, including islands that didn't have people on it but were inhabited by penguins, which was a joke that, everybody kind of talked about for a while. Um, but they kind of made a point like if you don't retaliate against us at all, you're not going to get any tariffs put on you. We'll roll them off type deal. But in this case, the European Union putting some tariffs back on the United States, I am sure is not going to make the administration happy, and I'd be curious to see if we retaliate back again because it
Yeah,
is kind of a tit for tat here. But
I was
go ahead,
just say,
Jake.
do you think it'll continue being a tit for tat? Like, you go higher, we'll go higher, type
I
deal,
I do, I
until
do.
one side gets tired of,
I
or
yeah
will it
I
just go on forever?
I think it'll be until one side cracks. Which is why,
Okay.
eventually we're going to get into this conversation about there's potential for recession, there's potential for not recession, and
Hmm.
everything that kind of goes into that. I mean, the world economy, believe it or not, is a very large beast. So um, it doesn't
Yeah.
shock me that there's a lot of moving pieces that we're trying to work through and unfold right now. All
Right.
right. So yeah, anything else you want to add on this before we head to the USA Today article?
Good. Get into it.
Alrighty, let's switch on over. All right, so there's a picture of so if you scroll up just a little bit, Zachary, so you can see there's this formula in the background. We'll get to that, but just for context, this is the formula that they use to calculate the tariffs. Um, oh, and okay, so I did get that number right the first time. It was 34% that the United States put on China originally, with them saying that 67% is what China put on us. So but yeah, so feel free to go ahead and scroll down. Um, then Liberation Day is kind of what it's talking about right here with the discounted reciprocal tariffs. Um, that was where Donald Trump, put those flat baseline tariffs on every single country. Yeah, most countries receive a base tariff of 10%. Um, the rates were calculated by having a rate he displayed as tariff charged in the United States, including currency manipulation and trade barriers. So they came up with this formula, which you can see down here, um, which you know I was never a great math student. Jake, were you a
No.
standout? No,
I l-
Zachary.
See. I always thought being good at math would be cool, but I was never that guy.
See,
No.
my problem was when you had the symbols in there. That's where I got lost.
Yeah, math
I
is
could
for
figure it
thee, not
out. It
for
just
me.
took me hours.
Did you say it wasn't for
It
you,
just
Zachary?
took me
Yeah.
forever.
Gotcha. And it took you hours,
Yeah, I could.
Jake.
Yeah, I could figure it out eventually.
So
And then
so
it was
what
then
we're
it was fine once I figured it out, but it took a while.
So basically, what we're getting here is that none of us are good at math. So don't expect the Neutral News Network to come out and give you math lessons. Um, but yeah, we're going to try today, even though you can see here that the formula looks pretty complex, obviously, with all the Greek lettering that they put in there. However, you can see if you scroll down just a little bit more, Zachary, there actually shows what it means. So you can see that the change in tariff import rate is exports minus imports over 4 times 0.25 times imports. So basically, the way they calculated this was you take the exports that the United States has to a given country minus the imports, and then you take that math and divide it by, or multiply it all together at the bottom, and then you divide that to get a percentage. So you can see down at the bottom, if we have a trade deficit with a country, you can see if you scroll down just a little bit more, so it's that 67.3% right there. Okay, wait. Now, okay, so this obviously is what came up with for this point here. So tariffs charged to the USA, 67%. The language on that sign is weird. So scroll down a little bit, Zachary, because that's the same sign that we saw, right? So tariffs charged to the USA, including currency manipulation and trade barriers. Yeah, so this is strange because like they're saying that the tariffs are being charged to the United States, even though these are the tariffs that we're putting on the other country. That's odd.
These aren't wait. These aren't the tariffs that the other countries are putting back on us.
No, these are the tariffs we're putting on the country. The one in white and blue there. So like it
Wait,
says
are you
for
sure?
example yeah. So like in the USA Today the USA Today article, it says, for example, the United States exported $143 billion in goods to China and received 438.9 billion dollars in goods from China in 2024. After calculating the formula, its change in tariff import rate would be minus 67.3, and it is listed on the chart at 67%. So I think the wording that they used on that chart is a bit strange because, yeah, it definitely reads as these countries are charging this to us.
Yeah,
And
that's how it reads. Yeah.
yeah, and then we're charging them that 34% on the right hand side. Like, yeah, USA discounted reciprocal tariffs, but that does not seem to be the case in the slightest. Um, so yeah, very, very interesting there. But yeah, you can see the calculation being performed on a few other countries. So if you scroll down a little bit more, Zachary, you can see that the numbers that they got, they're using this formula. So South Korea 50%, India 52, and so on and so forth down the list, or up the list, I guess in this case. But I think that's why Vietnam got slapped with a 90% tariff, which is a bit steep, but hey, um, that seems to be quite the interesting way of putting it. I don't know if I would have done it that way, but hey, I don't get to make um I don't get to make policy for the president or posters either. Actually, and before we head over to TradingView and before we start diving into like the economic impacts and things like that, do you want to click on that learn more about tariffs, that upper left hand article right there? Because I think this is a cool way of kind of keeping track of where we're at right now. So scroll down. Keep on a going, keep on a going, keep on a going. This is a good article if you want to actually post this in the chat for our viewers. But this is a pretty cool article actually. So you can obviously see there's different tariff rates, which again that kind of shows that 46% that we saw on the right hand side of the chart, along with 20% tariffs with EU and other things like that. Now, if you scroll down a little bit more, you can see tariffs that have been imposed against the United States, with China obviously having the highest as of this article, this article was updated 2 days ago. So this was prior to everything that's happened recently. So just know that that's a little outdated, but I still think it gives a good um, overview of kind of how things have transpired as of right now. If you keep on scrolling, it gets down into like an actual timeline. Um, so you can keep scrolling, and we don't have to cover like every portion of this, but you can keep seeing more and more Canada
I love
retaliation,
I love
China.
a good timeline.
Right, hey, it tells the story, right?
It does.
Yeah, so this is it's a pretty long scroll, but yeah, so this has been an ongoing thing for about 2 months now. So we've been in the tariff we've been in the new trade war for quite some time. Not to be confused with the Clone Wars; it's very different. Um, but
There
yeah.
is well, there is a lot of clone stuff happening too,
Oh,
and
that's
like
true. We
yeah,
could have talked about the dire wolves, which is very cool stuff. Me personally, I'm all
it
on
is
board for
really
that.
cool. Me too.
Yeah,
It's so cool.
yeah. Just maybe if we get the opportunity to turn an iguana into a T-Rex, we should maybe stop
Not
and
do
think
that.
about it for a second. Yeah.
Yeah.
But yeah, so right down there below, you can see kind of a calendar of when were announced, when they took effect, things of that nature, and then you can see the retaliation. So there's there is something coming up tomorrow. So yeah, the 34 retaliation tariffs to take effect from China. That's happening tomorrow, and then the EU retaliatory tariffs are to happen next week on Tuesday. So there is more to come, and again, this was before um, everything that transpired today. So I'm sure that this, when if and when they choose to update this, this will look different. So yeah, anything you want to add before I kind of go on an economic tangent,
Nope. Go
Zachary?
for it. I'm ready for it.
Let her rip, champ.
All right. So when it comes to economics, right? Tariffs are obviously extra expenditures that companies are going to have to absorb one way or another. We've covered this in previous episodes, but basically it's just, you have to pay for that tariff when that good enters the country. Now, the company has two options because the company is paying for the tariff, right? The company is paying that tariff when that good gets brought into the country. Now they have two
Right.
options. They can either absorb that price and cut into their profit margin, or they can raise prices on the consumer. So, the thing that's happening right now, and I think that one of the things that's concerning to a lot of individuals, like one of the more prominent figures that I've heard talk about this is Jamie Dimon. He's the CEO for
I've
oh,
heard
I
that
think it's
name.
Chase Bank. No,
I
he's the
think you're right.
CEO for JP Morgan. I think it's JP Morgan.
I think it's
JP Morgan
JP
Chase.
Morgan. I think you're right.
JP Morgan Chase. Yeah. So Jamie Dimon is obviously um, a big
Yeah. Yep.
swinger. JP Morgan Chase.
Yep.
Yep.
JP
Okay.
Morgan. Yeah.
Yeah, so
Chase.
he's obviously a huge swinger when it comes to the economy as a whole. Um, so he went out and said that he was expecting a recession from these tariff announcements when Liberation Day was announced, and he's so far, due to the events that happened today, he has rescinded that recession call as well as a few other. I think Goldman Sachs got rid of their recession call because these tariffs were put on pause. Um, but the concern is that there's a potential for this to have lasting effects. So think of a train, right? You've got a locomotive driving down the tracks, and there was a storm that blew a big tree over onto the tracks, right? So the locomotive in this case is the economy, the global economy, and the storm is all of this stuff with tariffs. And now the tariffs themselves are the tree. So let's just say the companies are doing everything appropriately, um, and they know it's storming out, and this train is driving down the tracks at 50 miles an hour, and they decide to slow it down a little bit. Just because you hear the rumblings of tariffs off in the distance, but they're not necessarily here yet. So you start to scale back. You start to scale back a little bit. Well, you're scaling back your company's growth. You're maybe scaling back on opening that new factory or hiring those new workers, but you're not in crisis mode, right? But you're starting you again you're hearing the storm rumbling in the distance. Okay, well, now the first tariffs start to happen, and it starts to rain, the wind starts to pick up, and all of a sudden what happened on Liberation Day is wham, these all get announced at once, and this huge tree, like just big gust of wind knocks this tree onto the tracks, right? Well, the train might be traveling slow, right? It might be traveling slower because of the storm, but it's still going to smack that branch or smack that tree that hit the tracks, and it's going to derail. Now the train is still going to be running for a little bit, but the train has been knocked off the tracks, and it's still moving forward, but it has been severely disrupted. So that's my concern, is that even just the posturing and the perception of these tariffs, and now the looming threat that this same stuff could happen again, businesses and enterprises across the globe are going to be so cautious. And I think that we haven't fully seen the effects of even the tariff, because there are tariffs that have been enacted and that are going into place. Like this is going to
Mhm.
happen. We're just not getting the big ones that we just heard about the other day. So, like,
We're
this is
getting
a
one of the big ones, right?
well, yeah, well, you can clearly see that the United States and China are duking it out right now.
Yeah.
So and those are the world's two largest economies. So, I mean, this is something that you can't exactly you can't slam the train on the brakes and then immediately start it right back up, right? Same thing as if you derail a train, you can't just put it right back on the tracks and expect it to be going full speed again. It'll take time. So my concern is that we could have already potentially pushed ourselves over the threshold in which we're going to go to a recession, simply because all of the talking and the posturing that has led up to this point has spooked the economy so much and prevented business entrepreneurs from actually pursuing their normal business activities due to the threat that a new tariff could come in and sweep their profit margins out from underneath them. Does that make
Mhm.
sense?
Yeah.
Okay. So, um, obviously, though, uh, going into what Zachary has up on the screen right here, we have got the major stock indexes, and you can see, based upon what he's got up there, is, and I know it's red right now because the stock market is closed currently, but it is.
I think this one's red just because I did the month view. If you go back to the day view, it
Oh,
is
you did the
back to
monthly view.
green.
Oh
Yeah.
yeah, yeah. Oh yeah, yeah. So let's keep it on that day view, just for context purposes. Um, so they're just, again, for, and I want to be completely transparent with this. I'm only stating this because this is news. This happened. Um, there was a tweet that was sent out by Donald Trump. I believe it was actually a post that was made on Truth Social, that said, like, this is, the one of the best times to buy this, that, or the other. And if you see on the
Mhm.
screen there around 1300 hours on the screen, you can see that little bump right there, and then the stock market kind of, no, to the left, that one right there. Yeah. So he made that tweet right around there, and then the stock market kind of wiggled a little bit, went down, and then you can see that it spiked way up. And I mean, that is a huge move in the stock market by, you know any imagination. I mean, it was a massive jump up, and that was when the Trump administration decided to pause the tariffs, the baseline tariffs that were going to take that had already taken effect on the world, essentially. Um, so there are Senate Democrats. I don't believe there's anything going on in the House, but there are Senate Democrats that are demanding insider trading be looked into, and market manipulation as well. And they're curious to know, who knew what when certain tweets were made, just because of
See,
the timeline of that. But
it makes a lot of sense that it could be this, but
mhm,
on the other side, you wouldn't know until it happens again.
right now
So
there
what
are
hap so do we
instances.
just so we have to just wait the 90 days and see what happens?
Yeah. Well, and that's the thing, is that we, as of right now, these same tariffs are going to come back up in the front line, like in the spotlight, in 90 days. Whereas right now there are going to be other tariffs. I imagine, especially with the pharmaceutical one, there are going to be other tariffs that are going to be coming up in the meantime, like
Right.
that are going to be in the news before we get to the like these tariffs 90 days from now.
Could it
So,
be like using certain tariffs to mask other tariffs?
in what way?
And in the way of like getting the public to come around to the idea of the tariffs because they are controversial.
I I think that could definitely be a strategy, especially like if you've got the big ones that are in the news, like what we have right now, and come across a scenario in which maybe you're enacting something that's a little bit lesser, maybe something that doesn't quite grab the headlines as much.
Right.
Um, it might be information overload for people.
Yeah,
Um,
that's what I'm saying.
you know,
They could
that's why we're
be
here to help.
doing this right. Yeah, they could be
Yeah,
doing this to information overload.
yeah. But and it's all to get their objectives done. I mean, it doesn't
Yeah.
shock me that they're doing. I mean, believe it or not, he's
No.
doing exactly what he said he was going to do. I mean, these tariffs.
Yeah.
I think the overall intensity of the tariffs, like the size of them, people didn't expect, which is why I think that the market got spooked and is
Yeah, I didn't.
still
I
spooked
didn't
on it,
really
even with the
expect it.
big
I
day.
expected him to do what he said he was going to do, but
Right.
I didn't expect him to this magnitude. I didn't expect it. I didn't expect to see the pausing. This is what the second time it's been paused.
So this is the first time that this one has been paused, but he
Uh,
did pause
right.
the ones from Mexico and Canada. So yes, this is not his first pause. And
Right.
and again, the market kind of did something similar where it was starting to drop, but then he paused it, it spiked back up, and then it dropped again.
Okay.
So yeah. If you go back to the 3-month chart, Zachary, it might be in there. Might be easier to see. What is
This
that?
is the 3-month chart.
Oh, this is the 3-month chart. Maybe go 6 months then.
I can't. I can only go to year. So congratulations, you get a year.
Okay. So but you can see it right there. So go to the left of that first dip there. Like, keep going. Looks like a Stegosaurus. Keep going. Okay, so this is in
Stegosaurus got
December.
nerfed.
Yeah. So this is actually shortly after Inauguration Day. So, but I think that's, so if we go all the way into like late December, because that's December 20. Yeah, so that's December. Keep going. So Inauguration Day was the 21st. So it was that hump up there. Yeah. So you can see like there's a little bit of uncertainty that were happening with tariffs, and then like there was the pause, and then we actually started enacting tariffs against Canada and China, and because that's like late February. So obviously the stock market starts to drop, and then you can see it ticks back up, and then Liberation Day happens, and it falls through the floor. Now, obviously, we had a huge rebound today. I mean, you can see 9.51% on the S&P, 12% on the Nasdaq, which is just bananas, honestly.
Hmm.
Um, like seeing those types of numbers is absolutely insane. Um, so it'll be interesting to see what happens like as this goes forward. Um, my concern is, and I just want to, again, we're not financial advisors here, but I want to preface the fact that you typically only see these types of big swings and volatility when you're in a bear market or you're in a seller's first market. I mean, we saw the same thing happen during COVID. We saw the same thing happen during the Great Financial Crisis. We've seen it happen, at various points throughout history where these big drops, but also huge swings to the upside are surrounded in what the stock market calls volatility because there is so much uncertainty and the stock market hates uncertainty. um,
Right. I'd be curious
and
to see who the big quote unquote winners are.
Oh, like the stocks that performed
Yeah.
the best today.
Right. Yeah.
Um,
I would be curious.
so Apple, like this is just kind of what I can see because I have TradingView open, but I have my own personal TradingView account open right now.
Hmm.
Um, so Apple was up 15%, Tesla was up 22, um,
Mm.
a cruise line was up 13, another company was up 11 and a half. Gold was up big today. Um,
Really?
Yeah, gold was up. I think like let me see. Yeah, gold jumped $99 an ounce today. Um,
Wow.
yeah, trying to see if there's any more huge gainers. Constellation Energy jumped. Let's see. What is that? Intuitive Surgical jumped. I don't know.
Hmm.
Oh, MGNI Magnite that was up 20% today. So yeah, I mean, there was a lot of double-digit gainers that occurred in the stock market today. But
Yeah.
um, I think one of the things that additionally was one of Trump's promises was his drill baby drill mentality. to lower gasoline prices and lower oil prices. Well, um, we're there already, um, and we haven't started drilling yet. So if you can see in that search tab, Zachary, type in U.S. oil. Yeah, so go to WTI crude. So crude oil is obviously a bellwether for all things economic, right? And so you can see that I believe since if you can click on the left, or so see that spike there to the left. Yeah, what's the date there?
January 15th.
January 15th. So we're leading up into the inauguration, oil was going up, 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 and then shortly before the inauguration, then after, oil's been kind of trending downward with a slight rise into um, what we all came to see with the stock market, which now it is, it fell off a cliff for a couple of days. Now, obviously, it rebounded today, but the thing is that really the danger zone for oil is sub 60. Sub $60, and we were below $60 a couple times, like for I believe almost a day and a half. Which, to put that in perspective, we hadn't been to those levels since right around, like right before COVID hit. We hadn't been to those levels since, like, 2017. And then we had been above that $60 level since March of 2021, so after COVID. So it's concerning when a bellwether-esque commodity like oil starts to sell off like that,
Can you
because
explain
that's
real
a
quick what a
yeah.
bellwether is for people that don't know?
So yeah, so a bellwether is just kind of your one of a economic indicators. So like basically it's a sign of the times. If you are um, like if you I think the best way to put it, if I can think, I'm trying to think of an analogy on the fly here. I usually kind of think of these ahead of time. Dang it, Zachary. Um, but I think it's just like one of your tried and true indicators. Think of it like if you've got a runner on a relay race on the track team, right? It's not one of those things that is going to be not one of those runners that are going to be super flashy. They're not going to be the fastest. They're not going to be the slowest. But man, you are going to get a consistent run time out of them every single time. It is a very good indicator as to what is going on underneath the hood on the engine that is the economy. I think that's the best way to put it.
Yeah, it's the indicator.
Yeah,
Yeah.
a good baseline
hmm
indicator. Yeah.
Yeah.
And additionally, if you type in gas, Zachary. By the way, this is TradingView. Anybody can access this free of charge. I choose to pay for it for my investing purposes. And then if you go down to Vantage, the gasoline commodity one,
Not a
the
sponsor.
orange one. Yeah, not a sponsor. Yep, that down that whoop, the Vantage one. So if you look on
I
the right hand
am
side.
big. Oh, okay. All right.
Yeah.
Big blind.
Okay. But same thing, here with gasoline prices. So obviously gasoline prices can be seasonal with the way that they make different blends for winter, summer, things like that. Um, but now if you scroll down a little bit, Zachary, you can see the same thing happen with gasoline prices as of late. Um,
I can't
you
scroll
might have to
down.
like so see the like where the price numbers are on the right hand side.
Mm-hmm.
So just click on that, like yeah, yep, and then you can like condense it. Yeah, so you can still see the same thing happened with gasoline as well with the stock market sell-off. So obviously gasoline has recovered to $2, which is good or bad depending on how you want to look at it. Obviously, everybody kind of wants cheap gas. You want to go to the gas station to fill up for $2.20 a gallon.
Yeah,
Um,
but to some people that's expensive.
but the thing is that
To
like
me, that's pretty
it's
solid.
yeah, right. Well, that's the thing is like so when you do inflation adjusted gas, like we talked about
We
this in one
talked
of our
about
previous
this, yeah.
episodes. Yeah, like inflation adjusted gas, we're cheaper than we've been in a long time.
hmm
Um, and it's only gotten cheaper probably since that episode. Um, well, actually, it had gotten more expensive since that episode. You can see that it was rising fairly steadily, which is why a lot of gas prices in our area. I mean, you're pushing 3.29, three
Hmm.
dollars a gallon. Um, but now we're back to where gas prices were earlier in the year, or early or late last year, where gas prices were probably in the low to mid twos. But yet it hasn't reflected that yet because it's that same whipsaw effect that I was talking about, like where all this stuff happens so quickly that companies haven't had a chance to respond to it yet. So,
Right.
like, I mean, the stuff takes time. I mean, gas stations have to order their gas in advance. They then have to get that shipment and that delivery, processed in. Then they have to change the prices. It's a whole litany of things. So, um, yeah. But let's head on over to the stock market writ large. Like, let's head over to the like, so type in SPY if you can, Zachary.
It yelled at me for being on
Yeah,
the
it
website.
with no
What'd you
ad
say?
blocker or with ad blocker.
Did you say
SPY.
SP?
Yep.
Which one?
Yep. So that very top one. So here's our wonderful stock market that we have. And so you can see that big huge green bar on the right hand side. That is what happened in the stock market today. And just to give some context, actually, if you want to zoom in, like, so if you can scroll to the right, Zachary, so click and drag to the right. Oh, the other, yeah. And then now, can you mouse wheel into it? Yeah. Okay, there we go. Cool. So now we can see, like, and this is a daily chart here. So you can see that, over the few days it had been trickling down, kind of lifted back up again, and then it dropped pretty substantially. And those were some of the big scary drops that we had been seeing in the stock market. Um, but what you're seeing right there is this huge day that, and
Uh,
oh,
we
go ahead.
got comments coming in.
Uh-oh.
NASCAR All Out. Are you guys good with fib retracement slash extensions? Curious what NAOV levels might look like. Look interesting compared to what AREB did recently.
So NASCAR All Out, I actually don't use fib retracement levels. And we're using Zachary's account here.
He has
So
a thesis on NAOV is that it's setting up for a short squeeze.
NAOB. So what is NAOB? NAOB, if I could type. Oh, okay. So just for context, NASCAR, we're not in, like, this channel isn't for stock trading or things like that. We're trying to cover just more general economic news writ large. I mean, that's something that could happen, but like, we're not doing necessarily technical indicators or technical analysis on these stocks right now. We're looking at this from more of a fundamental level. But if you have any more questions that are more fundamental basis in nature rather than technical, we can definitely look into that. But that's not something that we're trying to cover on this live stream, sadly. But we appreciate you for tuning in and watching. Ah, all right. Anything else? Like anything on Facebook or anything like that, Zachary?
Negative.
All right. Cool
Oh yeah,
beans.
side
Well,
note, we're on Facebook.
yeah, yeah. Your comments cannot be seen on Facebook, but we are on Facebook too. So, yeah. Now, another thing that kind of is important with the overall macroeconomic lens that we're looking at right now is bond rates and yields. So, if you could type in US 30Y, so this is your long bond. So, yep, the long bond government yield. Yep. So, feel free to zoom out on this a little bit. Okay. So, you can see yesterday, and by yesterday I mean earlier today, because the market has since closed and reopened. We're now in the after hours trading for the next day. Um, the yields have spiked over the last few days. I mean, they were dropping as the um, stock market was starting to drop as well. But then when we had these huge free falls, um, the yields actually ticked up, and there's a reason for that. Jake, I will give you $5. I'll give you $5 if you
Okay.
can guess as to why yields rose over the last 3 days. So you can see those two big green bars and then that red bar with a big tail at the top. So why
Yeah.
did yields spike in the last 3 days?
Put me on the
I'll give you
spot, Brian.
I'll give you three guesses. Zachary,
Why
feel free to guess as well.
why yields rose is the
Why
question.
these long-term yields rose?
Like the big green bars is what you're talking about.
Yeah. The two green bars
Green
on the
bars.
right-hand side, and then the big red one with a big tail at the top. Because that tail shows you how high it got in the day, and then where that red bar ends at the top, that's where it closed at the high. Or sorry, it's where it opened at the high, and the red at the bottom is where it closed. So
Okay.
yeah, it shows that it closed higher than it opened.
Is it because of the tariffs?
Lower. Yes, it is because of the tariffs, but that's pretty generic.
Yeah. Well, it's my guess. And when was this? When?
So this was the last 3 days.
Last 3 days.
And
My guess.
you'll have to go back to it, Zachary. It probably refreshed you to the last one, the U.S. oil one. So you'll have to go to US 30 again. But go ahead, Jake.
Because the tariffs made everything else plummet, so the long term would go up.
So now that is like kind of what I'm reading into before those green bars, because
Okay.
yes, like now to put it in perspective, if the 30-year yield drops, that is typically more of a sign for recession. Like if yields start to lower, that means that you're trying to spur growth by having lower yields. But in this case, they spiked.
Right.
Now, so they weren't necessarily saying like, oh crap, it's going to be a recession, like or the market's going down, so we have to now go up like that. So that wasn't the case in this case. I'll give you one more guess, then I'll tell you, unless Zachary has a guess.
I did, and I forgot already.
Oh no.
Does it have anything to do with the Fed and their interest rates, or lack of doing anything with the interest rates?
That is a great answer. That is a great answer. I think that's maybe a part of it, because I believe that the Fed did have an FOMC meeting right around where the yields did bottom, and that is where Jerome Powell did come out and say that they are not looking to touch interest rates right now. They're not looking to raise them. They're not looking to lower them. Mostly, again, due to the economic uncertainty that these tariffs are bringing. The Fed has no control over this, trade policy. So the Fed has chosen to try and stay as far away from it as they responsibly can. But this brings up a good point, and I will come back to that point before we start to wrap up this episode. But I just want to throw out that, so the reason that this spiked here was because China owns a lot of long-term U.S. government bonds.
Wow, I didn't know that.
Yeah, so they
Makes
own
a lot of sense
ton.
though.
Yeah. So them selling bonds makes this price go up.
Yeah,
So
that makes a lot of
and
sense. And they're going to
the
sell
more
bonds because of the
all the tariffs,
Yes.
which is going to put stress on the economy here, because we want yields to lower so people can have cheaper mortgage rates and things like that. Like that's why I think a lot of people need to understand that these systems are in the trillions to pushing on low quadrillions in money around the planet. I mean, these are just massive, massive markets. And, you buying your coffee every other Tuesday at your local Starbucks, yes, you contribute. But if you were to stop buying your coffee at the local Starbucks tomorrow, it's not going to make that big of a deal when it comes to the overall grand scheme of the global bond market.
There'll be like no blip.
Right.
You're not going
Exactly.
to see that blip on these lines.
Right. Exactly.
Yeah.
So what happened was, and this is again speculation, but I think it's pretty good speculation. the Chinese government
Again, we're
was
not
dumping.
financial advisors. Brian is not a financial advisor.
Correct. I would love to be, but I don't want to go and take more classes to do that. Uh,
Study.
but
I think you'd be good at it.
I think I would be too. But it is tough to get a CPA, especially I think like a level 3, which is like what you need to like have
Oh
your own
yeah,
practice.
yeah. Oh yeah, for sure.
But yeah, so I'm almost positive that the Chinese government was selling U.S. bonds into the open market, and therefore, when you're selling the yields and these prices that you're seeing go up. So it's the inverse effect. There's TLT, which is an actual ETF that represents like the actual price of the bonds, like in an ETF portion. So if the yields go down, the price on that ETF goes up. So it's they're inversely related. Bleh. But so yeah, but that's why this happened. And as you can see, they're starting to tick back down. So that'll be interesting to see if this continues, with obviously us ramping up even more trade disagreements with China. Um, but going back to what Zachary brought up with Jerome Powell and the FOMC, so as we've talked in previous episodes, Jerome Powell kind of has the power of the interest rate control when it comes to these short term interest rates, like your 3 month, your 2 year, things like that. He is in charge of making sure that um, he sets the policy for the interest rate market. So he came out in the FOMC meeting a few days. Actually, it really wasn't even an FOMC meeting. It was, I believe, he was talking to some journalists in Virginia, of all places. And they asked him like, "Hey, what do you think? Like, what do you think of the tariffs?" And he basically said like, the Fed's job is to remain impartial. He's like, we don't play politics. We don't, get involved with the squabbles or the inner workings of different political parties and things like that. So he basically said, I'm not touching that, not touching it with a 10-foot pole, which, good for him. That's not his job. That's not his responsibility. Um, but yet it does impact his job and what he does. But they asked some good questions, which I think kind of lean into what if we go into a recession here? So the Fed has two goals: stable prices and maximum employment. So tariffs are inherently inflationary because you're having to pay more for a good. So again, the company has two choices: either to keep their price the same and cut into their margin, or raise prices on the consumer. Well, if you raise prices on the consumer, that's inflation. Now, the same
That's
token,
like the definition of inflation.
right? Now, if you have a tariff situation where you do these tariffs and you raise prices on the consumer because you can't cut into your profit margin anymore, or maybe let's just say you can't, you can't afford to cut into your profit margin at all. Maybe you have to lay off workers. You know, maybe you have to downsize the company. Maybe you have to shut down a factory. Maybe you have to do X, Y, Z because of the tariffs. Well, then that's kind of adding to the unemployment.
This is
So
like the whole controversy with the tariffs.
correct. Yes, this is the
So,
whole controversy with the tariff
some
because
people think
I
it's
understand.
gonna. Some people think it's gonna bring those American jobs back.
Right, but let me put it this way to you, Jake. Would you want to work even in an American factory for $22 an hour?
No,
No, not a lot of Americans would.
no, yeah,
Especially if you can work at McDonald's for $18 an hour, right? Just
right.
throwing it out.
Yeah,
So
you can, or like Sheets for. Oh,
yeah,
not everyone's
Sheets,
gonna know what
Bucky's,
Sheets is. Yeah,
yeah,
Bucky's for like
they're gas stations. Yeah,
16 to $18 an hour.
yep. But you can start to see the problem here. So these companies, maybe they raise their prices to the point where consumers can no longer afford to buy their products. Okay, so you can't cut into your margin, right? Because your margin's already slim enough. You've raised prices in order to not cut into your margin. Well, now you've priced people out of buying your product. So your sales go down, which means then your profit margins go down, or your profits go down. Your margin technically doesn't go down, but your profits go down because you're making less sales. So then you have to lay people off in order to make that up. So you've got the situation where you've got an inflationary spike, but yet also a spike in unemployment. So now the Fed has a job to do. They have to keep people employed or keep the economy humming while not allowing inflation to take hold. But yet tariffs cause inflation but potentially raise unemployment. And the tool that the Fed has in order to combat that is to lower interest rates. Well, if you lower interest rates, there's a problem with that. Lowering interest rates provides fuel for the economy.
What
And
about getting rid of income tax?
that's not the Fed's job. But I get what you're saying. That is
Mhm.
something you could do in order to try and potentially boon the American
That's what.
worker.
Yeah, that's what I'm.
Yeah. Yeah.
That's where I'm
Then
getting at.
that's something that I don't know if that would have to be
I don't know
that
how it all works, but
oh the income tax is an amendment, right? Like a
I think
constitutional
so.
amendment.
Yeah, I think it is. I don't. Oh,
Let me see here.
16th.
Yeah, yeah, the 16th. So the thing is that good luck.
Right.
Whether it was Kamala Harris in office or Donald Trump, I you know the government is so divided right now that I don't think you're going to get the votes to um, amend the Constitution as
Right.
it stands. So
Right.
I don't think that that's going to be an option that's going to play out anytime soon. I could be wrong. Maybe some Democrats would lean into it and say like, "Yep, this will help the lower class worker." Da 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 da.
Well, the thing about with Democrats doing that is like, wanting to amend the Constitution. You could also say then, well, why are we amending this one, but not the 22nd that allows the president to run for a third term?
True. Well, and I think that'll be the thing is like they could potentially have concessions to where they could vote for the 16th, but I guarantee you, with how much the
I don't.
Democrats despise Donald Trump,
I
they
doubt
they
it's
won't
gonna happen.
they won't
Yeah.
touch the 22nd with a 75-foot pole.
Oh no, they wouldn't. Yeah.
Yeah, but no. So Jerome Powell, for the man who's currently in charge of the economic lever when it comes to interest rates, he is in a rock and a hard place. Um, because if you lower interest rates, inflation goes up. If you keep interest rates the same, we've got the tariffs that are potentially causing inflation to go up and unemployment to go down. If you raise interest rates, you potentially lower the inflation, but you probably cripple the economy.
It sounds like to me. It sounds like the public is just kind of losing here.
Yeah,
Regardless.
yeah, we are slowly uh, gliding down shit creek without a paddle, if you will.
Yeah.
Um, it's not rapid, and we're not,
We're
it's
what is it? We're canoeing down shit creek without a paddle.
yeah, but like the boat's not like rocking yet. You know what I mean? Like we're
Yeah.
not getting anything in the canoe.
Okay.
It's just we're there. It smells bad, and we're just like, well, crap, we can't get out because we don't have a paddle. So like, but we're it's the problem is that we're getting into a little bit more turbulent waters. The canoe's starting to rack back and forth just a little bit. So definitely something to keep an eye on as the days go on because um,
It's
Jerome Powell's
interesting
term
though.
is oh yeah, absolutely, and Jerome Powell's term is up next year. So he will be. I imagine he's not going to get reappointed by Donald Trump because those two do not get along. Um, they've made that quite clear, or at least Donald Trump has made that quite clear that he does not get along with Jerome Powell. Jerome Powell obviously tries to stay out of it. But right now, Donald Trump wants Jerome Powell to start lowering rates, and Jerome Powell basically says, "I don't answer to any political party. We are impartial. We do what we think is best for the economy." Is basically what he
He
said.
said, yeah, we talked about that before. Yeah.
Yeah. Yep. Yeah. The Fed is supposed to be an impartial, non-political branch. So not a branch of government, but just a different economic wing in a sense.
Mm.
Um, yeah. But that that's a bird's eye view on kind of what's going on with the economy right now. What's going on with tariffs, things of that nature. Yeah. I mean, any questions, Jake, before we eventually hand it off to Zach to kind of wrap it up here and send us off?
No questions, but I
Mhm.
get a lot of my like stock market investing knowledge from Investopedia.
Yep.
Not a sponsor, but I really like that site, so you guys
Vestopedia is good.
yeah. If you're interested in learning, you can look up like definitions of stuff on Investopedia. So if there's stuff that you have no idea what we're talking about, look it up on Investopedia. It's good. It breaks it down, I think.
No, absolutely, and as we've said multiple times on this channel, we're here to help, potentially give you guys the resources to go educate yourself one way or another. We're here to provide, hopefully a story that gets you interested in a certain topic, and then you go out and learn more about that topic and further your knowledge on it. And whether that contradicts what we tell you on this show, or whether that agrees with what we say on this show, that is up to your interpretation and kind of what you go and learn on your own. And
And
that's perfectly all right.
And my other last bit here, with especially in this previous election, the economy being like the number one issue. I think, I'm not gonna say if you want to. I think we all should take more time to learn about what the economy and the stock market is doing.
Correct.
Because it does affect all of us. It does affect it affects everybody.
It is shocking to me how many people I have talked to, friends of mine, who I say, "Hey, like, what are your allocations into your 401k? Like, do you know what you're invested in?" And almost every time they're like, "No, I've never checked it." And it's like, there's nothing against that. That is a perfectly valid thing to do. But, in times like these, maybe you do want to have a financial advisor that you can chat with, that you can, maybe they can either be in charge of your money, or you can, talk to them and say, "Hey, what do you see?" Like somebody who actually is licensed to tell you what they think is going to happen. Because this is your money. This is money that you've put into the stock market. This is your retirement. This is when you're 65 years old. Hopefully, you're going to be able to look at that nest egg that you've built over, 4 decades, uh, and have a retirement, whether that's for you to go travel the world or do things you want to do, or if it's for to give it to your family. It matters, and you should have some understanding about what causes it to go up or down. It's not a, again, it's not a magic 8 ball. None of what we told you today is going to predict what's going to happen in the future, but you can kind of see how they're all coalescing into potentially turbulent waters coming up.
And financial advisors aren't. It's all a prediction. It's all prediction. They're not right 100% of the time. They just know the trends. They can see things better than the average person.
There's a financial guy, that I talked to on Twitter back in the day. He's actually got 1 million followers, so he actually sat down and had a conversation like this,
Oh, really?
over
That's pretty
Zoom
cool.
with me. Yeah, so it was very cool getting to talk to him. But he said that there's no gurus, there's only cycles. Like, so the market goes through these up and down cycles, and there's no wizard out there, there's no guru out there who knows everything. But there are people out there who can see the cycles, and they can play them, the right way, and try to maximize your returns, responsibly. So just keep that in mind. Again, knowledge is power. So, yeah. Zachary, you wanna send us off here?
Sure. The only thing I really
After your
have.
big yawn there.
Who? What now? Would you say to me?
I said after your big yawn there.
Uh, the only thing I have is this depressing map. If
Oh
you're
yeah,
if you're
I
looking
saw the
for
orange and I
warm
was like, yay.
if you're looking for warm weather, you gotta wait. Unless you're out west, in which case, good for you. Congratulations. Share, jerks.
Was it too?
Yeah,
Is
pretty
it
shitty.
too? Is it too hot out there?
Yeah, actually, yeah. I wonder what the temperature is projected to be in like Las Vegas. I see that they're in the bullseye
Because it
down
looks.
there. So.
Keep in mind it's above average for this time of year. So
I'm sending this, Zachary. You have to share this screen. It's hilarious. This is the Las Vegas, weather, for like the National Weather Forecast Office for Las Vegas. Look what it says. Back to the 90s.
that's fantastic.
Wow.
That's
Pretty good.
amazing. I love it.
I'm glad somebody's National Weather Service office can have fun.
Yeah.
Yeah.
All
Yeah,
right. Well, any
that's really
last
all I have.
comments? Perfect. Awesome. Well, yeah, if that's all we've got, then thanks everybody for tuning in. We appreciate you watching another episode. we're going to try and be back here same time next week as long as everybody's good to go. But outside of that, we'd really appreciate it if you liked, comment, subscribe. Again, if you've got any comments that you want to send to us directly, feel free. And outside of that, we just want to make sure that you guys are learning, making sure that you're kind of expanding your horizons when it comes to your knowledge base and things like that. And, follow us on
Yeah.
Facebook too.
And if you think what we say is a load of BS, please reach out to us and tell us why.
I'm kidding. I'm not going to fight anybody.
No, I want to know.
yeah,
I want to know what other people. I want to know the flip side. I want to know what.
yeah.
I want to
And-
know both
and-
sides.
And just as the last thing, I want to point this out. I've had people in person who, they know me personally, but they've watched our episodes. They've come up and said, "Hey, you got this wrong. Hey, you got this wrong. Here's this information going forward." That's perfect. That's what we want. We want to make
Mhm.
sure that we're getting corrected. We want to make sure that we're giving the, the right information to y'all. So if that happens, let us know. All right. So with that, thank you so much for watching, and we will see you next week. Everybody take care and keep